In today's episode of FinTech First, I introduce Sean Grossman, co-founder of Momo.Credit, whose sole mission is to make your credit card work for you and not for your bank. Listen in to hear more about how he started the company, built first version, then went to build MVP and raise funds for his consumer fintech company, together with his co-founder Austin Nick PL. Welcome to the podcast. Today we're going to talk about Momo.Credit and how you founded it and your path over past year and plus. And so can you share more how you started the whole company? I know that you're working on this very hard with your co-founder, and you recently had a ProductHunt launch and a bunch of other things. So how did you start the whole thing in the first place?
Yeah, well, firstly, thanks for having me. This is awesome, and I really appreciate this. It was great getting to meet you in OnDeck, and this is one of the many benefits of the OnDeck community. But getting into Momo, so I graduated from college a few years back. Got really, really deep in the world of credit cards, and all my friends around me thought I was losing my mind. I was spending hours reading subreddits, analyzing the most recent up-to-date rewards. And just getting really, really down to the gritty of it, where I'd say, like, my friend was about to pay with a debit card and like pull back their hand, and I'd be like, wait a second, you have a credit card that's giving 3% back this month. Let's use a different card. And they got really annoyed with me because they were like, well, what are you doing? What I realized with credit cards, and for a lot of my peers, what they didn't understand was just like the way that we talk about credit cards right now, there's a lot of stigmas around them, right? We have this rise of debit cards that are credit cards that are debit cards that act like debit cards. And we see this like whole new journey of things like this coming to market. And what it really plays on is just people not being financially, literate enough to understand the benefits of credit cards, which was a really scary trend that we were seeing within the industry. So I built out this Microsoft Excel spreadsheet that you would upload your statements into. And then from all my different credit cards that I had, so in that first year of opening all these cards, I opened about 17 different cards.
Wow. 17.
Like I said, got very, very deep into it. So after I did that, I was sending around this Excel sheet that all of my affiliate links, because I recognized that the second way to capture money on credit cards was having friends sign up for them. So I sent around this Excel sheet where they could click my link, and it would tell them, which of the credit cards that I had would be best for them. And what I was doing, all I was simply doing was translating all these, gamified rewards into quantitative numbers and hard dollars so that they can understand, if you open this card, you would make this much money. And that was the genesis of Momo. And like you said, yeah, we've been at this for a year now, almost, which is
how does it feel 1 year later? Like you build like lots of different things.
It feels really good. There was a lot of learnings very early on, and a lot of hard lessons that we've learned, and we're still learning to undo. But it feels great. I don't think we've ever been in a better spot with the company.
What was the easiest part to convert from the Excel to an actual mobile app?
So actually, there was one step before we went to a mobile app. When we launched Momo 1.0, it was this black to white gradient screen. It was a web app at the time.
And I remember the test play, but I guess it was later, right?
Yeah. You got the test play a while later. I think the test play came out in December. This was around maybe like June of last year. So it was even before we went full time on it. It was this black to white gradient screen, and said, all right, guys, give us all of your bank account information. People were like, well, wait a second. And nobody went through it. I think we sent about 50 of our friends, and we maybe had 13 that said, all right, like, you guys have security practices in place, right? You're not just starting my username and password somewhere. Like, please let me know if I need to change my bank accounts. Then we built this sheet out. We realized that you can't build a consumer fintech tool without design being at the very, very core of what you're building. I mean, it was essential to even the problem that we're solving.
But it worked, right?
So the web page should not work at all. Like I said, we got about 13 users that went through after sending about 50 people. But we realized that design was imperative, and then that the other trend that was happening in the industry was that more credit card applications were coming from phones and tablets than they were from desktops at this point. So we decided, we're going to capture that trend. NerdWallet is embedded in the SEO space for, just computers and desktop searching. And we saw a huge opportunity to be the mobile way of finding your next credit card.
Nice. So let's gear for a second. Like, I know that you have a co-founder, Austin, and you actually based in Austin, so it's a great coincidence. I'm curious, how did you guys meet in the first place? Was it before the company or during the company? How did it go?
So me and Austin actually grew up together. We're both from Eastern PA. He was my childhood best friend. He went to school at University of Maryland. I went to school in Pittsburgh. the summer of our junior year in college, we both moved down to DC. I guess he didn't really move too far, but I moved pretty far. I moved from Pittsburgh to DC, and we lived together. Both knew we kind of want to start businesses. We didn't know the problem we wanted to solve, and we knew a really bad way to start a business was to have no problem whatsoever. So we were waiting for the right problem to come, and we were bouncing ideas off each other for about a year of what it would be.
Hmm.
We started maybe
Was it during pandemic or before pandemic?
what was that? Sorry.
Was it during pandemic or before the pandemic?
Before the pandemic, yep.
Okay.
But yeah, so long story short, we were childhood friends. Then he went to become an engineer out at Airbnb in Seattle. I went to a Microsoft spin out in Seattle. And then we were like, look, it's time to take this thing to the next level. And we went full time on Momo. And yeah.
Nice. Can you talk more about the decision going like from the previous corporate job into the full-time founder thing?
Absolutely. Yeah, I mean, there's two sides of it. Like, the company was moving really slow and it's really hard to iterate. We hired 2 interns that summer, and the interns were, working really hard, but we didn't have enough direction for them. And by the time, at an early stage startup, things changed so quickly that by the time we'd give them a project, it would be, the project would change my requirements. So there was just the project, we saw an opportunity here. We wanted to capture it. We wanted to be the tool that was doing this, and we just weren't moving fast enough. From like the decision to then jump full time on Momo and like what that really looked like from a personal level. We saved aggressively to be able to do it. We were bootstrapped and we went full time on Momo entirely.
Come on, did you use your own product to save the money?
Yep, well, use my own product. Yeah, in the first year of credit card churning, I made about like $10,000 in rewards, which was great. So it definitely helped being able to go full time on Momo. Yeah, and so from the personal side, Austin was then working at a YC startup. Got more clarity, that he wanted to be in the startup ecosystem. I was trying to launch a startup partner program and like early partner program at the Microsoft spin out, a company called Acumatica. And I loved what I was doing. And then one day we had the interns out in Seattle. And I remember I was just sitting there. I'm like, wow, this is, what I really want to do. And I'm kind of wasting my time doing other things. So, with a lot of privilege and a lot of, hard work, I was able to get there.
So now you're actually doing this thing. So how differently does it feel compared to what you were thinking before back then?
I thought back then I really knew business, and now I recognize I know absolutely nothing about business, and it's a learning curve, a very steep learning curve. But it feels great. I mean, like I would recommend to anyone who feels like they're kind of stagnating at work to just find what is the most interesting thing they could possibly be doing at the time and go after that. And for me, that was starting a business in the credit card space. It was a space that was super important to me personally, and yeah.
Nice. And they should use your product to save money to go full time.
Absolutely. Yeah. If they want to check it out for sure. We're
Awesome.
available on the Apple App Store and the Android Play or the Google Play Store.
Yeah, I saw the ProductHunt launch. I'm curious, how did it go? Like I saw the app, right, that you pushed out to the app stores, right, and then the ProductHunt. I'm curious, like you obviously getting the early traction. Can you share any numbers behind the scenes?
Yeah. So I won't go into raw numbers, but what I will say, the ProductHunt launch went very well. We ended up getting featured in the newsletter. One of our biggest concerns prior to going into the ProductHunt launch was we'd have a relapse of the same thing that happened when we launched that black to white grading screen, where we'd be sending to people and no one would want to link their bank accounts. But what we actually saw is about 85% of our users linked their bank accounts and completed onboarding through Momo. So nice. Great numbers. It was our largest individual day of credit card signups ever in company history too. So it was a massive win. And yeah, we're getting ready for the next step too, another launch coming up.
Oh, can you share more details on the next launch?
Sure. Yeah. So we're going to be doing for the next launch is going to other forums and that are common in the credit card space. Our thought process behind starting with ProductHunt was we wanted to start to those that are closest to us. So we did a LinkedIn launch like a month back, and that was like our most immediate network. And then we went to a ProductHunt launch, which was a lot of startup founders who understand, the startup ecosystem, understand what we're trying to achieve, understand that, sometimes buttons don't work exactly the way you want them to when you click them. And so then now what we're doing is getting ready to gear up on r/credit cards for a launch there. So it's a community of about 825,000 people, and we'll be launching there at the end of this month.
Wow. Sounds like amazing opportunity.
Yeah, I'm very excited for that. Very excited.
Can you give an advice like to other fintech founders in the consumer space? What kind of channels did work for you when you launched your product? And you mentioned that LinkedIn, right? The ProductHunt, Reddit, like others. What worked well? What didn't work as you expected?
Absolutely. So I think there's two parts to this question. What works well is solving a real problem that is a hair on fire problem for people. If it's not a problem that like people are actively looking for a solution for, they might tell you, like, oh, this is really cool. I would use this. This is a really cool way to think about how much I'm spending on Starbucks every single month. But if it's not, they're actively looking for a solution there, it's, unfortunately just not going to make it. Because, it's not enough of an issue for someone to go to an app store, download a link, and then, go through and utilize, what your app for the purpose that it has. In terms of channels, what worked well for us, there was no single channel, to be honest. And a lot of companies in the consumer fintech space, and this was one of the earliest misconceptions I had about starting a consumer fintech, was that you're building this company that works for a certain person. But really what you're building is a brand. And so much that comes to every single brand having a different channel that works. We can take, for example, Sequin, sorry. They were a YC winner 21 company that offered premium benefits for credit cards specifically targeted to female audiences. And at first glance, I was like, well, this concept doesn't make sense to me. Like, why would you have a credit card that is simply offering, its audience to females? And then I was thinking about it a little bit more. And what I realized is that the way that credit cards are so often branded is they're not towards a female audience. Even in our audience, we're seeing 88% male. So to build a product that specifically has a distribution strategy and feeling that resonates with the specific demographic is so essential. So
yeah, we're seeing the same thing with a bunch of neobanks, especially in the consumer space as well.
Absolutely. You see a lot of these neobanks come to fruition that have this background specifically, within serving a specific demographic.
Yeah. I'm curious, what is the next product expansion in your case? Like, you obviously got the footprint right in the small part of the market and you're growing, right? You're gonna do this huge launch next. I'm curious, feature-wise, product-wise, where do you want to grow further?
Absolutely. So we want to get to the point where we're the most accurate way for you to get a credit card on the internet. And I would say by the end of this month, we'll be there. I feel very confident and transparent in saying that. Right now, we are the most accurate way to figure out which credit card will be best for you and your goals. But what we're not at yet is the most understandable. So we can tell you all this information, but we have not achieved the part where, our users understand exactly why we're making the recommendations that we are. If you just opened a credit card last month, why are we telling you don't open a credit card this month? It's not very clear at a first glance. But in the long run, with what your goals are, opening a credit card will be detrimental to them. So there's the right time for that. And so the next features that we're looking to build out are those that help you understand what Momo is recommending. And so you can actually understand your finances and have this visual walkthrough, because I don't think that's something that a lot of companies do well yet.
Interesting. So can you explain this from the consumer point of view? How would they go and do this walkthrough that you think is going to be the next thing for you?
Absolutely. So the walkthrough that we're implementing is very similar to the Spotify Wrapped tour at the end of the year. So where you see all your music that you've listened to, you've seen how many hours you've spent. And we want to give you that exact same feeling with your credit cards and, where you're spending your money. We want to tell you, look, you spent $3,000 at grocery stores last year. This might be an area where you want to prioritize getting a credit card that supports rewards in, because right now you're only making this much. Or we want to tell you that, look, you've opened 3 credit cards in the past 12 months. Right now, it might not be the right time for you to do it. Here's your most recent applications. Here's how, if you were to open a new credit card, we imagine it'll affect your credit score.
Nice.
Getting very transparent with that.
I love the one line like Spotify for your credit cards.
Yep, very much so. That's the next wave. Because Spotify does a great job of telling you where you spent so much time on the app and where you were listening to your music. And that's something that we need to recreate, because until users can understand and people can understand where they're spending their money, why would they get another credit card?
Yeah. So how did you come up with this idea to actually show the breakdown on their spending? Did you do the interviews? How did you get this insight?
So the breakdown that's currently live, or the breakdown that we're going to be showing?
The cool one.
The cool one. All right. So the way we got the inspiration for that was a lot of users would come onto the tool. There's actually one of my good friends. He went through Momo, and the way that we're unfortunately conditioned to look at credit cards in the industry is they're just advertisements, right? You see a NerdWall ad and it's like, here's 60,000 free points. And you're like, well, is that even for me? Can I get a proof of that? And we've sort of conditioned this industry and every consumer to think these ads are just lies. And what we found was that when we were making these recommendations, we weren't showing the user how they were going to earn this money. We were just telling them they would earn this money, and we need to help them understand how they were going to do such.
Oh, that's interesting. Do you think you're going to be able to change the perspective of seeing those ads and seeing those lies, actually getting actionable insights on what to do with credit cards?
Absolutely, that's our goal. Our goal is to be placed as your bank. So right now, banks have misaligned interest. They want to make money on fees. They want to make money on account
On everything,
balances,
yeah.
interchange. We don't want that. We want you to make the most of your money. We'll charge a user subscription for this.
Mhm.
But what we'll do is we'll help you become financially optimal without ever having to think about it.
Nice.
Um,
So let's go deeper on the business model. How do you plan to make money? Like you obviously touched point on the subscriptions, but you also get lots of data, right? And you have ads on the other side. I'm curious, what are the channels that you considering to go with, like in the long term?
Yeah, so in the long term, user subscription, we want to, if you're going to pay money if you're going to pay $500 for a premium annual fee card, we, believe that we can charge a fee to make sure that that annual fee card that you're at least, using will be worth it and you're making money on
Smart.
that. And yeah, same with Truebill, you cancel your subscriptions, they charge you there. Same with us, we help you become financially optimal, we charge
Yeah.
there.
Sounds almost like a Amazon Prime model, like where you need to buy in, right? Actually use it.
Absolutely. Yep.
Interesting.
Exactly.
Do you have any aspirations to move into actually creating a credit card by yourself?
Um, it's not something that we haven't talked about, but it's a big business within itself.
Oh yeah.
So in 3 years down the line, I won't be surprised if we have one. But in the next 2 years, I won't expect something like that. I think the way that we'd actually go about it, is we would probably go down the debit card offering side. I don't think interchange is going to be something here for many years, and I think even
Oh
Visa
yeah.
and MasterCard are, beginning to pick up on this trend. As we move towards DeFi coming in, I'm not certain that this will be the continued way of pay. Small business doesn't need to pay 2.5% because you're using credit card. That's something that
Yeah.
we should. So I don't think interchange is a sustainable business model in the long run. But I think lending against your balance is. So that might be something we're interested in a few years, but again, not today.
Interesting. So let's gear back for a second. Like you talked about building a brand, right? And you have already a bunch of consumers sign up in the waitlist and using the app. Congrats. What is the main like common denominator between all those users that sign up and using your product so far?
Yeah, a common denominator that we're finding is, from a demographic perspective, they're users that are financially literate. They understand their finances. Starting with someone that needs a lot more coaching before isn't necessarily the earliest adopter of your product is where we want to get to, but not where we're at today. Other common characteristics are they know that credit cards can make a lot of money, but they don't know how, and investing hours to learn about it is just not what they want. If you can get a recommendation that just shows you this is the one with the highest number and this will earn you the most rewards, we believe that's kind of the future that they're leaning towards, as long as they can understand why, rather than read this NerdWallet article, watch this YouTube video, watch, or read this deep Reddit thread then that talks about all the different ways you can transfer these points. It's not what they want. The information just needs to come to you. And that's what I think a lot of our users are looking for.
Nice. And I guess like last time we spoke, like you've been talking about the Gen Z generation, right? About the college
Absolutely.
students and so on. I'm curious, what age, like the average age of users are?
So average age right now is about 28 on our tool. We have about 60% male, 40% female users. And we are looking to move towards Gen Z a little bit more. A Gen Z is going to go through this part where they, right now have, I believe, like 1.8 credit cards, 2 credit cards on average. And they're going to be moving away from their student cards. They need a card they're ready for, their first rewards cards. I'm at the very beginning of Gen Z, so I'm 25 right now. And they're going to be looking to get into the first, premium rewards card, the card that pays them for when they're traveling for work as a consultant or in tech, And we want to help them find their next credit card.
Interesting. So this positioning, how is going to impact your launch and growth strategies? Like you're going to launch this like huge channel with 825,000 people, right? And moving forward, how do you plan to utilize this knowledge, right, of addressing this need with the audience?
Absolutely. So in the long run, what we'd hope to be is the only fintech app that you need installed on your phone. We'll help you with management.
Super app.
Super app, yep. It gives me chills when you say it.
Exactly.
So we'll avoid saying that. But we want to replace your JP Morgan, your Chase app. We want to replace your Discover app. We want to replace your Truebill. We want to replace your Credit Karma, and we want to offer all this, personalized information in the wrapper of Momo. So all this information for you and bring it centralized to us.
Oh, that's exciting. I'm curious in the back office of this whole operations, like with the data, obviously you all just saw the privacy issue, right? Like that you had in the very beginning was the black and white application. I'm curious, what are the next tech challenges that you're seeing, coming your way, like building out the product, the growth scale and other pieces.
Yeah. So in terms of privacy, we believe your data is your data. So we don't sell your data. We don't monetize on your data. That's not our plan. Or an angle that we're really looking to take. I don't think it's one that will age well either. So I think, the current companies that do that are in for a rude awakening. Um, and then, sorry, what was the second part of that question there?
Yes, as you scale your product, right, you're gonna face different technical challenges. Kind of like in the very
Yeah.
beginning, I assume you're using Plaid, like in a bunch of other similar tools,
Yep.
right?
Yep.
You're gonna accumulate more and more data, right? And you on a great mission, right, to personalize that experience for the end user, right? So I'm curious, what kind of challenges you anticipate in the long run?
So there's some scaling costs when we're looking to integrate with Orem. I describe Orem as bill pay for Plaid or Plaid for bill pay, I mean, which will allow us to move money in between your accounts. So that there's some scaling costs there. We're in the process of becoming credentialed by the bureaus, so we'll have all of
Right.
your bureau data, and we'll be able to see, okay, here's your history of credit cards. It'll allow our recommendations to be much more accurate. We'll see if you downgraded from a card previously. We won't just recommend it to you because you won't be approved for it. Um, so there's a lot of scaling costs with the data and acquiring that data. I think in the long run, there's an opportunity for us to, rebuild some of that infrastructure in-house. But that's, a 5-year plus mission.
Yeah, makes sense. And in the near term, do you see yourself working like with a B2B, like with other banks and, in more close relationships, actually letting users use credit cards?
No, I think we see ourselves in the long run as a B2C product. It's the niche that we're building out. I think maybe there's a B2B distribution angle that we could consider. But made famous, I guess, by Dropbox there, where, Dropbox started as a B2C company, and then the founder realized the best way to build a B2C company was have a B2B distribution model. So
Yeah,
I think there's a way that we can partner with employers to make sure that their employees aren't financially stressed and anxious, worried about if they're going to be able to pay bills in between and, can they afford daycare?
yeah.
I think there's an angle for us to partner there. But no, not necessarily. I think there's a lot of organic channels that we can continue to, build on. And we really like to get to is a referral strategy
Hmm.
where people are referring their friends to Momo after, they get value from the
So
tool.
you mean like a usual like word of mouth, or do you actually incentivize them to do the referral?
It incentivized, very similar to Morning Brew style
Hmm. Nice.
would be, yep, the goal.
Yeah, exciting. It's funny that you mentioned the morning brew. I'm curious, like you have a huge competitor as a nerd wallet, like a bunch of other
Sure.
smaller, and they're all doing lots of different content, and you really great with product, right? Technically, and you already have the traction. I'm curious if you're gonna step in the same kind of field to level it.
So the way these competitors make money is by removing clarity. That's not our goal. They have a lot of unnecessary information and bloat that
Hmm.
makes it really hard for you to decipher what actually is relevant to you. Like imagine, you just graduated college and you're trying to figure out whether you should invest money first into an IRA or you should move money into a 401k. You read an article online, right? And it says a 401k is the best thing in the world. You read a Reddit thread and it says you need to be doing an IRA or else you're going to mess up and you'll never be able to retire. We don't want to do that. That's not our goal. Our goal is to tell you, if you do this, you will be financially optimal and move your money in between your accounts. So very much if this, then that for money movement would be a
Yeah,
goal of ours.
interesting. So in the long run, do you see them, optimizing this financially optimal state, or is it going to be like all AI ML driven on your end?
Uh, Definitely some AI and ML driven on our end. Absolutely. Our model will continue to grow, like you said, with the data that we're using. It'll continue to grow and, we'll be able to see back from transactions as we get more access to bank accounts. We'll see it and be confirmed with, we're making the right recommendation and provide a positive point to our data leak and continue down that path.
Nice, exciting. Awesome. I think we touched like on all the main points. I'm curious. Last time we spoke, you were doing the fundraising for your company.
Yep.
I'm curious when it's going to be the next round.
That's a good question. It's something we're not thinking about right now. And with our previous round, we realized that what we need to do is build the company. We had our successful raise, and I think we'll probably gear up to aim again maybe at the end of the year. But it's really once we have the confidence that this is the right product in the right direction and that users
Yeah,
want. But yeah, short answer, maybe end of year.
makes sense. Well, obviously you've seen like what's happening in the fintech space in general with valuations, like in pre-IPO companies. I'm curious, what is your take on this?
Yeah, I mean, it's not exclusive to just the fintech sector.
Oh yeah,
At the stage we're at, it feels like valuations are a lot more art than they are science. Later stage,
That's a good one.
definitely, it's a little bit, it's more of a scary time to be like a Series A, Series B fintech company, taking these valuations. I think, we are seeing a market adjustment where maybe Klarna was super overvalued. I think that's okay.
Yep.
You know, but then in terms of what we're doing, even on our end, before we actually closed the round, we decided, that we really wanted to make sure that our earliest investors would return multiples. So we actually decreased the cap in which we were raising it right before the round closed, retroactively gave all of our investors the best price. And yeah, we want to be well positioned to go into this no matter what the climate is.
And you did the pre-seed or seed?
Our pre-seed.
Great. So what would be your recommendation to other fellow fintech consumer founders, right? Like that are raising, let's say, this venture?
Yeah.
What should they do?
Focus on metrics. I mean, if your business can't survive without metrics, it's going to be a really hard time, or without millions of users, and that's kind of the path where you have to build this FOMO business where you have all these users and no real metrics and no real signs of growth. It's going to be really hard to raise, I think.
Yeah.
But for those that are, building these businesses that, start by making $1,000, then move up to $10,000, then move up to $100,000, there's going to be someone that wants to invest and, be on your journey from, even 1,000 to 10,000, then surely from 10,000 to 100,000. So focus on metrics, I'd say, is a big piece of advice I have.
Great answer. I'm curious, like in your case, do you track those metrics in the background? Like, do you have like any special dashboard? Is it more like, a manual process when you go through the numbers?
In terms of how we're looking at our numbers and our users,
kind of how do you track your metrics? Like you obviously have like lots of different data points, right? Like the MRR, the user tracks, like the obvious and basic ones. I'm curious if you go deeper than that.
Yeah, to some degree. We use Pry to track our financials and our burn. It's a great tool right out of the box. You see all of the key metrics you need about your business. In terms of user interactions, it's something that it was one of the biggest mistakes we made with Momo. We didn't have very great tracking, even up to our ProductHunt launch. After our ProductHunt launch, we installed some great tools that helped us understand our users a little better. But previously, what we were doing is calling our users. They would get a text message from me, and still even to date, they're getting text messages from me where I'm just saying, "Hey, I really appreciate you checking out the tool. Can I buy you a coffee for 15 minutes of your time?"
Nice.
So I'd recommend every founder does that to any point.
That's the best way to talk to the users.
Absolutely.
So did you go like with Google Analytics or something more specific like for your tracking?
For tracking, we're using Mixpanel. We use Google Analytics. We're using Segment. We're using Hotjar. We're using this awesome startup right now called AirSnap as well for mobile session replay. So I really recommend it out to anyone who's starting in the mobile space.
Yep, nice. Like when users sign up, like I check out the application on the App Store, the new one, and it looks like there's like always like with all the consumer fintechs, you have to opt in right with the data point. I'm curious, do you utilize the analytics to understand that kind of like funnel better, like where they break out and where they actually continue opting?
Of course, yep. Right now we are heavily only focusing on top of funnel. For someone to go all the way through with credit card signups is something a little bit too far for us. And we started there, we'd be chucking a ball 5 miles and saying go get it versus just chucking it 300 feet for it and going to get it. So I think starting with top of funnel is essential, especially for early stage consumer fintech founders. Get people to download your tool. Once they start downloading your tool, get them to sign up for your create an account. Very early with Momo, we actually saw people were downloading the tool. On our LinkedIn launch day, we had maybe I'd say probably about a little around under 100 downloads off the post. And our conversion was about 30% from creating an account. And we were like, well, what is going on here?
That's really good for LinkedIn. Yeah.
Yeah. We had someone go all the way through signing up, download, and then they got to the, create an account and they just weren't doing it. And now we're seeing, we optimized that. We reworked how we were displaying the information there. And now we're seeing all the way through credit card sign, which is a few steps down funnel even, not credit card sign, account linking, which is a few steps down funnel. We're seeing 82.5% of our users, or about 85% of our users, linking their bank.
Sounds like your strategy about the UX pays off.
Yes, absolutely. Yeah. And being a design forward company, especially in the consumer space, is incredibly important. I'd recommend for early stage founders to just really, really understand the jobs to be done framework. There's a book I'm actually reading right now, and it's replaced my 0 to 1 as best and favorite startup book. It's called When Coffee and Kale Compete by Alan Clement. and anyone that's building in the B2C fintech space should absolutely read it. Because
Awesome.
it'll make a lot of sense as to why I'm saying there's a giant market for SIC when a month ago I was saying I don't know why someone built this company.
Awesome. We're going to include this in the description for the podcast.
Awesome.
Yeah. Let's gear back for last time. You mentioned Klarna, and obviously, like their problems are not our problems, which we're lucky not to have. But I'm curious about their product, the BNPL, buy now, pay later. Like it seems like you are perfectly positioned at some point, to get in the same ish market. I'm curious, like obviously, a bunch of founders have different opinions about this market. I'm curious, what is your take?
Yeah, I really dislike the buy now, pay later market. I think we are just marginalizing people that don't necessarily understand payments. And it's just, what we're seeing from the market that led for buy now, pay later to exist was the requirement for having more flexible payment terms.
Mm-hmm.
There is, in my opinion, no reason for a company to exist solely to offer buy now, pay later. I talked to a founder in this space a little while back, and the original benefit that he talked to me about was the speed in which they can do the underwriting. So they don't need to do a full background check. They don't need to use a credit score, which was interesting. But now, I mean, a few months later, we see what they're talking to the CFPB, and they're like, oh, it would be really cool if we had bureau data, and we'd love to be able to report when people don't pay. So that argument kind of fell flat. Financial literacy is dwindling in the U.S. In 2020 or 2021, FINRA did a survey to analyze financial literacy, and we saw from people aging 24 to 35, I believe, which the age range, only about 17% were able to pass a financial literacy quiz.
Oh my God.
And then to offer a tool that makes it easier to overspend, it's entirely against what we're working for with Momo.
Yeah. Sounds like you picked the right mission.
Yeah, I mean, the consumer debt crisis is one of the biggest problems that we're just not focusing on because banks are making money off it.
Let's go like one level deeper then. Like, what do you think about the upcoming recession, and then how can your product enable people, to do better during these times?
Yeah, so when I actually started Momo, the pandemic first hit. I was working in federal sales,
Wow.
and in Washington D.C. And I recognized that the other option for me wasn't just go get a job as a bartender because bars weren't, operating.
Yeah.
So
DC,
it
yeah.
led me to very quickly, figure out other ways. I opened this credit card. I went down the same path that many people go down, opened a credit card that a friend recommended to me, and I didn't make any money on rewards. And I was like, well, what the hell? People are making tens of thousands of dollars. What did I do wrong here? It became really, well researched in the space. And I would say we're going to have to be more diligent with our money for sure. There's going to be new market opportunities, and I think Momo is, an example of one of these that was born, in the pandemic. I'd say focus again very much so on building a business that does $1,000 in revenue before focusing on a business that does $1 million in revenue. I think with companies like Fast, that's not the way to go. $600,000 in revenue at almost a unicorn valuation. That's not how you build a real business. And what we're focusing on is building real businesses, more so than we have been in the past.
That's a really good answer. Really love it. With ProductHunt, right, with Reddit, with a bunch of other channels, you obviously are exposed to a global community, and there are lots of people, like living outside of the United States. But so far, you're offering only United States credit cards products. I'm curious if you plan to expand, and if yes, at what point?
Yeah, so there's some credit cards are different all around the world. The US is a country that has gamification to the maximum level with credit cards.
Yeah.
So it's a very natural starting point because there's a lot of need to understand what these rewards actually mean, what the structure looks like. In other countries, in India, this isn't the same structure that we're seeing. Going international is definitely a plan for us. And, I think that even in Canada and Mexico, there's a really good opportunity for us. The UK had, competitors like us, already in existence. The UK with open banking was a little bit earlier than the US. So I think we're seeing some trends that can be applied to the US right now.
Yep.
And yeah, so going international in the long run, absolutely. In the near run, in the next, 18 months, I don't see it as something on the roadmap.
Got it. I'm curious if you can utilize some of the open data from the open banking in Europe to actually improve your models.
Absolutely. So very much so. And even with outside of Europe, what we can do in the US is this is a trend that's happening and one that's long overdue. At this point, banks will not get in the way of the government for, requiring, which is good and a great transition that we're seeing.
That's a bold take.
Well, it's an optimistic take, maybe.
All right.
But yeah, so I'm hopeful that
I
this.
hope that's going to be true. Yeah.
Yeah, I'm hopeful. Yeah, I'm hopeful. I'm optimistic that it will be. And even with Plaid, I mean, could you imagine years ago when you were telling banks that every single person would be able to sign into their bank with any PFM tool that they're
It was
looking?
almost impossible to talk about this topic in US. Yeah. Like in Europe, it was
Exactly.
like more open. Yeah.
Yeah. So as this trend continues to happen, there's going to be more data that we're going to have access to, and more ways that we're going to be able to help our users. And the UK, a more mature market in this space, has shown, that there's hope.
Awesome. Great answers. We're almost at the end of our podcast. So any last words, any recommendations or advices to other consumer fintech founders in the space?
Yeah, so I'll take a step back from even consumer fintech founders and just go founders in general to start. If you're a founder, I believe it was Rahul Vora that said this. Make sure that the issue that you're solving is the biggest issue in the world to you, because if it's not, it is a long journey.
Oh,
It
yeah.
has ups and downs. It's hard. So if it's not an issue that you're super passionate about, the hard days will get the best of you. And when hard days start winning and you stop having fun with it becomes really hard to start a company. So make sure you're building a business that you really care about. In the consumer fintech space, I'd say there's a huge opportunity to replace these legacy tools that aren't, aligned with current business models. Even from budgeting, right? We see this natural adoption from users that were using Mint previously to going to tools like Monarch Money and Copilot. Mint offers the same functionality, but now you're able to, no longer be beholden to banks and advertise and align your interest with consumers, which is awesome. So I think there's a lot of other areas in the consumer fintech space that have opportunities for this.
Awesome. Thank you so much for your time today. It's been really a pleasure
Absolutely.
to know more about your business and how you're growing. Definitely good luck with your next launch. And thank you for your time.
Thank you. Or great talking to you. I mean,
Awesome. Thank you.
bye.
Subscribe to FinTech First at AwesomeFinTech.com.